What is going on, everybody? One more big announcement. There's a lot going on. I don't know if you heard Putin's speech as well, that it was shaking a little bit of the markets, but we are here. Welcome back, Terra Luna Classic holders. Welcome back, crypto holders, Bitcoin, CRONOS, and everybody who is concerned about and looking ahead about this massive FOMC meeting rate hike that we're going to be having extremely soon. Announced at 2 p.m. Eastern time. That will be 1 p.m. Central time right here. And I'm excited. Let me tell you, I want to see what in the world is going to go and happen. Make room, guys. What's going on? And welcome. I'm ready to see what will happen right now, and that's what we're seeing so far. We had a great time yesterday night, early morning. Made a video about finally achieving that, and letting everybody know that wow, it's here. And I want to see right now the charts. You're seeing it right now. I'm seeing even some forming wedge for Bitcoin, but for LUNC we're looking really nice. I mean, for the last couple of days, ever since, gotta close this, ever since September 16, we're pretty much seeing that right now for LUNC, for Bitcoin right here, right next to me. Oh boy, all this urgent big news happening in 1 September. Like, there's just a lot of things going on that you and I know makes this month some of the worst one for crypto, right? But it's about to be seen. I wonder if the LUNC whales waited, right? If they waited for this event to actually do something, because the price didn't do anything yesterday night when we got like 1,000 people here watching, and it was pretty insane. So right after this, Papa Powell, Jerome Powell, is going to speak live. There's an interview he has, the press conference in like half an hour. So I want to go ahead and stay tuned on that one too. But first is the reaction with the prices and the entire markets to see what is going on. How exciting. So, Luis, GTTV, welcome everybody. Happy to have you in the house. Let's go. We'll go ahead and leave you to do its thing. Terra Luna Classic urgent. I want to see what is going to happen right now. FOMC rate hike. Guys, it's just going to be insane fireworks. I love to see that. Whether we catch a massive pump for Bitcoin or a dump, which is about to be seen. It's about to be seen. Here it is, pretty much, right? 100 basis points will work for food. 75 basis points. Well, it's like we're staying normal, and less than 75 basis points, we're staying really, really cool. Some of the target rate probabilities, I'm going to show this later on, of course, but everybody, is thinking about, a rate hike that is going to be 75 basis points or so, not that higher. Going back to the prices right here. There it is. So it's coming in about 10 minutes. 10 minutes to go. What's up, the Golden Eagle? Happy to have you in the house. Welcome, welcome. Watching from Trinidad. Hey, that's so cool. Happy to have you here. Gotta tell you that Bitcoin here in the charts, I'm gonna go ahead and bring my price right here. We touched $18,291 roughly in 1 a.m. yesterday. No, 1 a.m. 2 days ago. So obviously, as we're heading ahead of this price, ahead of this number, we gotta get to be seeing what's gonna be like. And that's why Twitter is gonna be my best friend to really tell me what will be that number, because everybody's gonna be posting it. How we feeling, guys? Much ready and refreshed? Hope everybody's ready to refresh. We had a good night's sleep with LUNC, which was yesterday was a bunch of different news and things. When it comes to LUNC, now we're seeing on LUNC Penguins more than 12 million burns so far. So as we expected, it's gonna take longer. It's gonna take a while to kick in and to burn all those millions and billions that Edward Kim said, right? You guys remember. So it will take some time, and it's pretty cool. Hello from Singapore, eh? What's going on, buddy? Very soon it's happening, guys. Everybody here. Interest rate hike coming in 10 minutes. Incoming volatility. Benjamin Cohen, I'm seeing you, brother. I'm seeing you right here. Exciting. He had a tweet. Basically, 14 people tweeted, and 14,000 people voted. And here it is. FOMC. It's somewhere there. Pretty much lost it, but I have it bookmarked on Twitter. The point of the story is that a lot of people are looking at the 75 basis points, and we're gonna see that. We're gonna see that pretty soon. There you go. 2 days ago, FOMC this week 75 or 100% or 100 basis points. 56% say 75 basis points. So why is this significant? Well, because this is gonna shape how people are gonna, regardless which is 75 or 100, it's going to be more expensive to borrow to cool down inflation and to break down that rate from 8% all the way to less than around 2%. That is the idea. So it's about to be seen. It's exciting. Let's go. As soon as you're coming in, everybody, don't forget to smash the beautiful like button and consider subscribing to the channel. Welcome aboard. Cool stuff. 7 minutes for this. 7 minutes for this. Almost happening. Oh boy. Exciting times, everybody. Exciting times. Welcome aboard, fam. Looking good? I'm looking good, thank you. I actually had a good night rest, so that really helped a lot. So we back in track. Oof. It's gonna be amazing, guys. Let me tell you that. Finally, some volatility, much needed volatility in the markets. Much needed volatility. Either it's good or bad. I think we just need it, man. Price analysis for LUNC so far, just doing sideways tradings, not really big moves so far for the last 5 days since September 16. Nothing. As well predicted, we're still inside that symmetrical wedge, even the Bollinger Bands and at the RSI. Really very few changes from what I can tell. But where things are moving on really rapidly is in the burns. Now with on-chain activated, block 9,475,000 with 200. Well, things are supposed to be looking not much better. And as he said, well, it's going to take some time to kick in. 5 minutes away. 5 minutes away, fam. Welcome, and let's get comfy. Don't forget to smash that beautiful like button, guys, and consider subscribing to the channel. We're about to see what in the world is going to happen with the price of Bitcoin and everything. Once again, I'm going to go ahead and go to my bookmarks. This is what we're expecting, 75 basis points, 75 basis points. It's pretty much what we're seeing right now at 2 p.m. Eastern. And it's everywhere. So I'm going to go to the FOMC here on Twitter. It's coming in. It's coming in. Take a look at this. Reminder 30 minutes. So right now it's 5. Expected 75. Latest funds 82% probability and 18% probability of 100 basis points. I think it's fair to assume that if we for some reason get 100, which is less likely, things are gonna go really badly in the prices. Here it is. Let's go back to the price. Almost there. Very, very excited for Bolt Eno. Nice. Think the burn was a bit of a letdown today. Do you think so? Well, if you're talking about the price, well, I mean, just remember one thing. I want to remind you all, the people who are working behind the scenes on this burn on Terra Rebels, to my knowledge, these are volunteers, right? They are putting their spare time to do this. So I'm okay waiting longer to see maximum, results later on. I'm okay with that. I don't have any rush with that. Welcome, Aaron. 3 minutes. 3 minutes, baby. Let's get the countdown ready. I want to capture it live to see what in the world we're going to see right now with the prices of everything. Where the whales are going to move from Bitcoin or LUNC, from LUNC to Bitcoin to CRONOS to Ethereum. I just want to see, it's going to be pretty cool. To everybody who's asking what is happening, we're waiting for the rate hike provided by the Federal Reserve coming in about 2 minutes. Exciting times because it is pretty much the bearish or bullish momentum. This is the number that we've been waiting for about months now. Ooh, ooh, ooh! Ha ha ha! Look at that! Look at that! LUNC is starting bearish before at 2 minutes. Look at LUNC. Ooh, you see, that's why I have this on, because I want to see where whales are going right now. And look at that right now. Oh, whoa. Get ready, get your coffee ready, get everything ready. Smash that beautiful like button right now. Let's see what's going on. 2 minutes away. 2 minutes away. I'm gonna go to Twitter right now and see the actual number and tell you guys here. Baby. 1 minute away. 1 minute away. Here it comes. Here it comes. I'm refreshing, literally. Look at it. Look at LUNC. Ooh. Here it comes, everybody. 1 minute away. Everybody looking. It's coming in. One minute away. This is a 1 hour chart, by the way. 1 hour chart. 1 to 2 minutes away. I'm refreshing latest on Twitter right now. So you tell me if you see it before. Bitcoin. Hey, you see the pump? What's it, 75? Okay, it's 1 p.m. now. It's 1 p.m. now. Wait, 100%? Sorry, 100? Fed raises rates by 75 basis points. I'm saying 75 basis points right now. Let's see. 75 basis points. 75 basis points. 75 basis points. 75 basis points. Ooh, look at it. You guys take a look at this one. Finally, 75 basis points, my friends. And as soon as right now, things are going to start changing and moving in. I'm going to go to my Twitter right now, and all the influencers are followed when I be posting that. Fed raises by 75 basis points. There it is. Let's go ahead and tweet it. Basis. There it is, everybody. Welcome aboard. How we doing, guys? Don't forget to smash the beautiful like button and consider subscribing to the channel. Turn on those notification bells. We're seeing this live right now. And well, 75 basis points. That's what the Fed has increased this rate hike. And we're starting to see some reactions right now in the markets for Bitcoin and LUNC. As you're walking in, enjoy it. First reactions prior, couple minutes before this started, we started to see LUNC dive a little bit, as you're seeing right now on the screen, passing the price channel, which is the wedge, and Bitcoin, it went from 19,859 really close to 18,684, so almost $1,000 like this. And right now it's moving. Let's enjoy the fireworks, guys. Let's enjoy the fireworks. 75 basis points. There it is. Shocker, 75 basis points, almost like I told you. Fed hikes interest rate by 75 basis points to 3.25% versus 2.50% previous estimation. And estimation was 3.25. So what was estimated was achieved. So at least what was, estimated was achieved. So nothing too critical, I will say, for the markets when it comes to massive dumping. Now, I remember looking at the previous FOMC meeting rate hike, and it was taking a while, a couple of hours after the announcement, but more movement comes from the meeting, from actually the press conference that we're gonna have in a couple more minutes right now. So it's coming right now. It's coming. Because he's gonna start speaking and we're gonna start listening right now. Can you explain to me the 75 basis points? Sure. They use 75 basis points because this is a metric of percentages. So instead of saying 75%, they use 75 basis points because you're gonna be added to the total percentage, which went from 2.50 to 3.25. That is the actual percentage. So it's like point in decimals, pretty much. It just adds more pain to any home buyers, anyone who is borrowing, just interest rates going up, right? Because we're trying to cool down inflation. That's what it is. In the 1 hour, everybody, we're seeing this move. The prices acting a little bit, as we expected right now. For LUNC, right before the announcement, we saw a couple of fireworks there too. In my opinion, with the 1 hour and 4 hours, it's the best way to predict and to kind of do more TA, because the 1 minute and 5 minutes, although it's really attractive, right? I mean, it kind of doesn't pan out the entire picture, guys. So I have this for us. Let me go ahead. There you go. So I got, boom. I got the meeting also is gonna go live, and well, the press conference. So I'm gonna go ahead and take a look at that one and listen to. Because everybody wants to hear what he has to say. So one thing is getting this information, which is of course making some moves in the market, and the other one is hearing him speak. Yahoo Finance. Here it is. Let me see. Oh, there it is. Let me see. Prices of Bitcoin acting crazy today, guys. Let's see. Insane stuff. That's Bitcoin, bro. We got on the right Bitcoin, the left LUNC. What's going on, guys? And welcome aboard. LUNC volume exploding. So far, it's chilling. So far, it's just chilling right now. Welcome, welcome. Nice. Go ahead and there you go. It looks like Bitcoin wants to go lower. It looks like Bitcoin wants to go lower than that because so far it's just chilling at these levels and it's like they're waiting for what he's gonna say. That's what they're waiting for. Let me see. They're waiting to see what in the world he's gonna say. And LUNC chilling right now. Chilling. There it is. Here you go. I found it. Live in 6 minutes. Federal Chair Jerome Powell holds the news conference following the FOMC meeting, and with this reading, 6 minutes away. 6 minutes away. I have it right here. So I'm going to be hearing and telling you what's going on so we can take a look at the price action, right? That's what I want to see a lot here. Welcome, guys. How you doing? Go ahead and smash that beautiful like button if you don't mind. Consider subscribing to the channel and turn on those notification bells if you're new here. Happy to have you here in the house. What's going on, Luis? Hi, Oscar. It's great to be a part of your channel, and thank you for bringing us with a great content. As always, appreciate everything that you do. God bless. Thank you, Ali. Always really appreciate all those kind comments. It's always really good to have you guys here. You know, let me tell you something. Let's talk about, the market in general, and of course, LUNC. There's too much to talk about too, but earlier today, we heard Vladimir Putin saying that he's mobilizing more troops. Obviously, there's question as far as how that war is going. China and Taiwan. We have, of course, now 75 basis points. It was not 100, so that's good. Basically, what we're waiting right now is to see where this upcoming October CPI data is going to look like. Once that CPI data comes, and if it's anywhere around 8%, we are just gonna dump so bad, because how in the world we go 3 months and we're still at 8%, right? It means that 75 basis points is absolutely nothing, and it's not really helping the economy. At that point, Jerome Powell will have to put out 100% or like 100 basis points, right? That's expected. But if by next CPI data we come out with roughly 7.8, then we are in the right path. We are in the right path because we're coming from 9.1% to 8.5% to 8.3% and to finally 8%, based on more and more and more additions to the rate hike. Cheers to that. Now, of course, live Zoom. This one is coming in pretty cool. Excited for this one too. Nice. Live in 3 minutes. Yeah, last time I was live doing this, I left before he was speaking, and I found out that a lot of the volatility comes when he speaks. Because one thing is getting the number, the other thing is how confident he is with that number and stuff like that. What's going on, Quiz? Peace and prosperity. Thank you very much, my friend. I'm happy to have you here. Hey Oscar, now that the Fed did 75, I guess CC will announce off-chain burn for LUNC. What do you think? He doesn't have to. That's one of the biggest hard to swallow truths about this project, LUNC, that I think it's coming in great terms when it comes to development and progress. He doesn't have to do that, the off-chain. If he wants to, he could. But it's up to him, right? It's up to Binance how bad they want to make us happy. Oscar, you got more knowledge in crypto than most of us here. Do you feel that holding onto LUNC will be beneficial in the future? I think holding cryptocurrency that you are up to date, not in the know for the latest updates, and know that it's not a scam rug pull and has some type of utility to society and especially crypto investors, I think that's a good thing, right? Because there's more than 30,000 or so crypto projects right now listed on CoinMarketCap. LUNC is just one of them. We like it. There's potential for growth, but there's also potential for growth for many other cryptos out there. So don't close your doors to the amazingness that's happening outside LUNC, right? Always diversifying helps to keep your investment safe, not financial advice. But what I will tell you is go out and explore different projects, read the white papers, find out, because it takes a while. It takes so much time, so much energy, and that's what it is, right? But at the end of the day, if you do it right, you'll be fine. Live in 60 seconds, speak in your own power. I'm happy to hear that. What's going on, Gaming Pro? What questions you have? Oscar, are you investing in LUNC? Yes, I am. I bought LUNC back when it was $7. So if there's someone losing, it's this guy. I bought at $7. I bought $1, $2, 20 something, 1 cent, 304, 303. All my LUNC is down, right? So I'm just chilling. Like, imagine if you bought in May, you are beating me when it comes to some of the gains. So if I'm not panicking, why would you, right? All right, let me see and refresh this beauty. But I want to buy more, but I mean, it's a lot of volatility that I just want to see waiting for Yahoo Finance. Great. I just want to know if we can get better deals. That's it, right? We're always hungry for more. Holding LUNC is going to be profitable or not? Just your opinion. I think so, but it just depends how long you're willing to wait, right? Because as expected, we didn't have a massive pump when the burn started. It was the news. Listen to this, my friends. Listen to this. In cryptocurrency and in life, what excites us the most are the news, right? It's like, no way I'm gonna be a parent, or no way this crypto is gonna be listed, and wow. Now, of course, it's a big difference with the examples that I've just used, but the point is that the news is what carries out media outlets, articles, predictions, and all of that. When we actually happen, when it's actually here, we already knew it. The magic, it's hard to sustain it. We've been there before. So that's what I think, right? But Ethereum merge happened the same way. There's a lot of people there waiting, but of course we came down. Just waiting on Yahoo Finance right now to kick it in. Some people here waiting with me. That's pretty cool. I want to listen to what the guy has to say. Listen closely, and I'm going to be telling you right now. Since I don't want to get any copyright whatsoever, I'm going to be doing it on my phone. Nice. Maybe I'm too eager, but the reaction thus far in the market reacting to the rate high is not bad at all, but market cap still green. Correct. Like I mentioned, usually where we get a lot of the volatility is with the with what he has to say, right? Is what he has to say too. That's important. So I want to tell you guys, from what I see, listen, for the 200 plus people watching right now, you have to, like me, step back and enjoy the ride, as I tweeted earlier today, because if LUNC is like, if LUNC will not put any more pumps for the rest of September, it's gonna get a little boring. We're not gonna make it boring. We're gonna be continuing putting all the latest updates when it comes to the burns and exchanges and proposals. But to be, I mean, honestly, of course, what people want is the pumps, because that's how we make money. So knowing how to differentiate the different type of volatilities, it's critical. Most of the cryptocurrencies I hold, like CRONOS, some of my CRONOS army, anyone in the CRONOS army here, let me see you. I'm talking Cardano, Algorand, Ethereum, Solana, AVX, Polkadot, and all I mean, CRONOS chain ecosystem, what have you. Most of us are waiting, right? So I think it's really good, and I'm grateful that at least we have a couple of cryptos to talk about and to enjoy while we're in this ugly bear market that nobody wants. Welcome aboard. Okay. Sorry, I switched devices and turned back in. I missed what you said about the speech. Thanks for clarifying that. Awesome. There you go, guys. Happy to see you all here. Some of my other fellow members and community. Have a deep feeling that we will be billionaires if we hold for a long time. I think millionaires will be good for many of us, right? Good for me, to be honest with you. Billionaires, a lot of people don't know what $1 billion is. They don't know. It's 1,000 million. Sometimes it's hard for us to spend $1 million, right? But imagine having $1,000 million. And when we talk about a trillion LUNC, that is 1,000 billions. So just imagine that. Insane. Still waiting on Jerome Powell here on Yahoo Finance. Nothing yet. I mean, like you guys said, not much going on, right? We can see right here at the bottom how LUNC bottom a little bit in the 1 hour, but it's holding well. It's holding well, to my surprise. I like it. Hello, Oscar. Do you have that breakfast for champs and coffee? Wilmer. Yes, I had a meal prep, but I'm moving that for lunch, because in my work I have had a lot of things, meetings and stuff like that. But yeah, let's put it like there's a lot to do, you know, in our 9 to 5 jobs, right? But I'm gonna do something special today. Like once after swimming, I like to swim, I like to work out a lot. So after that, I want to go and do something special, right? And enjoy it, and whatever happens with this meeting, right, and the announcement, just enjoy the day. If one thing I know is this, as a content creator, we have those few days in the year where things are doing really well, like this popping off, and you know, everybody's excited, and we just want to make a good time for everybody. We cannot guarantee anything, right, when it comes to price, because nobody knows what the future holds for the price. But I mean, after all, just having a good mind, a good headset when it comes to what's going on, and that's it. Couldn't be more bullish in crypto and blockchain at this time. Right now, there's a conference in New York called Mainnet, and I know about that company because I applied for the company that hosts this event, this conference. I didn't get the job because of X, Y, and Z. And my skills were really good, but they didn't want me for X, Y, and Z, right? The point is, CRONOS chain is there and Binance is there, and Binance had CC live at that conference. So a lot of great people are there in New York right now, if I'm not mistaken. So Oh, baby. All that progress on blockchain is what I love a lot. A Cash, thank you, my friend. I appreciate that a lot. And welcome for the awesome super chat. What do we have? Hey, man, I was checking the on-chain volume today, which was 49 billion. But the burns are way less than 1.2 tax burn should be 500 million, right? Well, I've checked for burns on Penguin, LUC Penguin, and so far it was like 12 million or so. Let me show it to you right now. I have it right here. So LUNC Penguin, it's a place where we can take a look at what's going on. And I'm also gonna open this for LUNC, which is my where is it? My Terrarity. So LUNC Penguin says that the burn by tax it's 14 million. So I'm gonna go with this one, just letting you know, guys, FYI, right, that this is what we have so far. Now we also know when it comes to burns that where is it? The supply, it's going down quite significantly right here. So in the past, let's do 4 hours. In the past hour or so, here it is. September 21st. Today, September 21st. So right about here, guys, it was when we got the tax implemented right about here, the 21st, when we were live. So we're now starting to see, you know, more relevant burns at this point in time, even for USDC as well. So it's nice just to, you know a little bit more data. This is what it looks like on Terrarity.io too. Here, we're currently adding the 1.2 tax burn to our data. Stay tuned. Oh, even look at this. We are actually about to see this on Terrarity. That's awesome. That's really, really good. I wanted to see that. Oh, okay, here it is. Burn with tax, 17 million. There you go. Cheers to that. Thank you, Terrarity.io. You're awesome. I really like this interface, by the way. I make websites, so I make applications on websites, and I'm like, whoa, I love this. Super quiet and fancy. So 17 million, everything looks perfect here. So yeah, really nice, really nice. I like this one a little bit better, the night mode. Let's go back to the price. So I hope you guys are appreciating all those updates. Why don't you go ahead and send it the like button and subscribe to the channel. Turn on those notification bells. Cosmos having a conference too. That's great. That's nice. Well, so far we're still waiting on this. Let me see. Mate Kevin, if he's watching. Nope, he's still waiting. I'm also waiting on Jerome Powell. We'll be here for a while, of course, for more time until we hear from the man. Damn, happened. We're burning fast. Not as fast as expected when it comes to we want to see billions in a day, but I mean, come on, we gotta continue, right? Slowly but surely. A cash, please check on-chain volume on LUNC Penguins. Got it. Thank you so much. Sab Oscar, what's going on, Gregory? Happy to have you here. Everyone should be ready for a bull market. Now this is awesome time to buy altcoins that could go up in the next few years. Buy altcoins you can have, things, CRONOS projects, and more. It's always good to buy when they're down, let me tell you that. Waiting for Yahoo. Wanna see this guy speak. Seems that people are getting a little bit impatient, which I understand. I would be too, to tell you the truth. Let me see if I go here, because I already liked this video. Liked. So far, the price is chilling. Here it is. There it is. Okay, got it. FOMC press conference, 2:30 p.m. 4 minutes. 4 minutes, guys. Nice. I'm gonna go for my, give me one second. Nice. Okay. Perfect. There you go. Nice. Okay. Good audio. And I want to hear this guy speak. 4 more minutes left to hear Jerome Powell. We want to see the action, guys, in the price, and don't take our head from that, because I want to capture all those movements as he speaks. I mean, listen closely. What happened yesterday with LUNC, it's important for the LUNC community, right? But what he's gonna talk about is gonna shake the entire crypto and stocks. So you're talking about more than $10 trillion in assets. Yep. Not just 2 billion or so that LUNC is worth. Cheers to that. Exciting. You guys want us to watch the speech together? I see some people that want to see it. You say yes or no? Who is Jerome? Jerome Powell is the Federal Reserve Chairman. Got it. Will do. Federal Reserve. Well, we'll have, I'm going to open up here. I'm going to close this beauty. I'm going to open up Bitcoin here. I'll do some magic here for all of us. No worries. We'll get everything ready. So I have Bitcoin right here. I have LUNC right here. And I'm just going to go here and open YouTube and get it all. Oh, it's starting. Good. It's coming in. It's coming in. We'll be there. Come out. You ready? Give me 1 second. Here it is. All right. Good. Enjoy, everybody. Welcome to the live. Oscar Ramos. Go ahead and smash the like button. There's the guy. Let's listen.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term deflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
So far,
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%. And we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
How many questions? Wow.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was?
Is there a point in time that you can see pausing? Is it linear that you keep raising rates, or is there, oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today we've just moved, I think, probably into the very lowest level of what might be restrictive, and certainly in my view and in the view of the committee, there's a ways to go.
Terra Luna Classic is pumping more with this than with the burn yesterday.
The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect, because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that. It's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, or rather increase in unemployment and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Just to follow up on one small thing, are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles, where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lengths, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
That's a good question.
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly, and that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith from the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
That is important, everybody. Yeah, it is. Why is it? Because
hi, Victoria Guido
it
with
might
Politico.
go 100.
I wanted to ask about
if needed.
The balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision. But the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Thank you. Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I, just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives. In our case, the dual mandate, maximum employment and price stability. but we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong, but there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward looking and the lags in your policy are forward looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower, that's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. You know, we're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability, and you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see exploding a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down, significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises, and so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
I hope.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter shelter inflation is going to remain high for some time. You know, we're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think you know, hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question. Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, you know, when we get to, let's assume we do get to that level, which I think is likely, you know, what you're going to do is you're going to adjust that for some forward looking measure of inflation. And, you know, that could be, you pick your measure. It could be, you know, there are all kinds of different things you can pick and you get, but what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, you know, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
There it is, the man himself leaving this place now, and the FOMC meeting has ended. Ooh. There it is. Well, everybody, how we doing? Welcome to, I think overall what the market is reacting to, good news. The market, we are reacting very, very, very good news for LUNC, for Bitcoin, for many of the things. Look, we're not massively pumping. This is going to take a while. This is going to take a couple of hours to digest, to let the markets, all of them, because right now it's still 2 p.m. We still have a couple of, like, less than an hour for the markets to close. So I'm happy to see that more volatility ahead in the positive side, but 75 basis points, everybody. We started the live about less than 2 hours ago. We got the reading, 75 basis points. We waited a while. We're hearing the man basically saying, we're committed to bringing the inflation back to 2%. They know their duty to serve us, that inflation is killing us at the gas pump and more gasoline and what have you, food and more. Well, everything seems that they're just waiting one step at a time for the CPI data. I mean, he said unexpectedly low, the first one, unexpectedly high, this one, the one that just got, and that's what they're being updating when it comes to the latest numbers. And well, I mean, one of the things that I wanted to mention that I said is that we got more pump during this news rather than during the burn, right? There it is right here. So we got the price coming in a little higher from bottoming up right here. Let me go ahead and bring the price. 302 all the way to 3029, and regardless, yesterday night and today morning the price dropped a lot. I left out at around here because it was going to be almost onto 3 hours, but the price did go a little bit lower. One of the things that I'm happy to tell you is that we're still consolidating in this wedge, symmetrical wedge. It's pretty good and it's exciting, you know. Now all of us, you guys are pretty much are telling me right now, but the burns 28 million. Starting this live, you can go and take a look and go back. You can go back to this live right now. We started at around 17 million. We just got about 10 more million in a span of less than an hour. Less than an hour, and we got about what, 10 more million, and right now we're looking at 30. Guys, This is coming in clutch. This is burning. We're not burning quite a bit. Let me go ahead to the transactions. Let me see this live now. I see 1 million there. Probably it's not yet shown here, but I mean the tax burn is working. The tax burn is working, and if we got 10 million burn LUNC in about an hour, if you got 24 hours, I mean 24 million so far. I mean, it's not precisely what we want, but it's a start, and I think it can increase as we are more and more of the exchanges and they start kicking in with more burns. What do you guys think, right? So cheers to that, everybody. I think we can all go ahead and now enjoy what the market is going to offer us throughout the week. Today is Wednesday, tomorrow, and we're going to end up this week. But so far, what you and I we've been waiting for, yesterday we got it. The 1.2 tax burn is live, and the FOMC meeting so far was not bad. I'm about to check some of the reactions on Twitter, but it was not bad at all. Do me a favor, go ahead and smash that beautiful like button, guys. Subscribe to the channel. We just passed 40,000 subscribers this week. I am immensely grateful to all of you, my viewers, the people who are coming back and listening and learning with me. Nothing is financial advice. It's only Oscar Ramos speaking to you from Texas. Happy to tell you that we are gonna be better than we are right now in the future. You will decide what kind of risk level you take and what instrument, cryptocurrency or stock, is gonna take you to the next level. But I'm really excited, guys, and it's pretty cool. So far, this is what we're looking like right now. And I have this. I have an investing. Let me go ahead and show it to you. Stake bin, here it is. The total supply, we have minus 36 million in the 1 hour, minus 5 million. So this is September at 7 a.m. and you're seeing right now how it's just going down. USDC going down too in a big way so far. 4 hours ago, going down as well for LUNC. So I think we may just want to give it a while, right? We may just want to give it some time for this to fully kick in. Now 31 million. It's coming in pretty fast, to be honest with you. I really like it. So honestly, this burn tax, it seems that it's really working fancy and nice. Let's go. That's what we love, everybody. That's what we love. Alrighty, let's go ahead and close this poll right here. And pump, and let's see how we ended this one. Pump, 82% say yes with almost 600 votes. Well, my friends, hope you like this FOMC rate hike, 75 basis points. Before you leave, go ahead and smash the beautiful like button. Consider subscribing to the channel. More updates as we see fit. We'll put more information and numbers for you so you can digest the information. And I'm sure that if you go to Twitter, there's more news going in here and there, but I don't want to make this live much longer than it already is. Thank you to all my members. Thank you to all the subscribers. If you want to join and support, take a look at the Patreon Discord, link in the description down below. Make some good money with crypto.com as well, link in the description down below. You can now support, because they support the 1.2 tax burn, crypto.com as well. And anyhow, there's a bunch of links there for free money as well. So consider those ones. Happy to see this. And let's see how we end this weekend. Thank you, TA. Thank you, Ali. Thank you, Soren. And I probably forgot to mention some of the donations up there, but thank you guys for that as well. Will come up later for sure on Sunday. You guys know that I stream on Sunday, but these were special lives just because, of course, of the massive events we got. But we'll see if we get some pumps, and expectedly we'll be here to celebrate as well. Thank you guys for this. Give it a year, you say. Of course, just kind of chill and enjoy, and we'll see what happens. Don't forget that we're still in a bear market. That's a sad reality, but it's gonna be fine. Together, a community in crypto can do a lot. Just watch us, right? Thank you, guys. God bless you all, and I'll see you next time, everybody. Peace, guys. Thank you very much. Catch you next time.